Does my bank account help me build credit? What is the correlation between my bank account and my credit report? Some important questions. And as a banker, a retail banker by trade, I hear that question or had that assumption made by tons of clients on a regular basis, having a hard time distinguishing whether or not their bank account is directly reporting to and helping them build credit, and what the connection between their banking relationship and the development of healthy credit is like. So we're going to watch a brief video, only about 2 minutes of the video, discussing really one of the biggest disconnects between building real wealth in this financial system, which is navigating your banking relationships. So we're going to watch this video to get some context on how bad the banking relationship scenario is for different groups in this country. And then we're going to come back and answer some of those questions so we can give you the clarity you need to turn words into wealth. I want you to have an understanding of your banking relationship and how it connects to owning more real estate, building better credit, being able to fund a business if that's the route you want to go, or maybe just to be sure that you're getting the best interest rates on anything that you are using when it comes to borrowing. Whatever the case may be where your credit comes into play, understanding how the connection between your banking relationship and your credit is going to help you to navigate building your credit and getting the best results so you can get the better outcomes on the financial end of the spectrum. So let's check this video out, or at least a couple minutes of this video, to get context on how bad the disconnect is between our banking relationships and our credit and our banking relationships as a whole, and the distrust with banks. And we're going to come back and get some clarity on how to navigate your banking relationships so you can get the best results when it comes to your credit and credit report. So let's check this out real quick.
It is not well known, but about 4.5% of U.S. households are unbanked, meaning no one in the house has a checking or a savings account. The rate declined during the pandemic, in part because people opened accounts to receive government stimulus funds. But disparities between the banked and the unbanked persist. Our economics correspondent, Paul Solomon, has the story.
Lord, we praise you and thank you for this food.
At home with his wife in South Memphis, Donald Jenkins.
Amen.
Amen.
So grateful he no longer lives on the edge. For years, a drug addict who couldn't hold a job, his petty cash kept close to the vest.
I had my money in my pocket.
But isn't it dangerous to have it in your pocket?
Yes, very. That's a very dangerous spot to have. We got robbed a few times.
Warehouse clerk Paula Jones used to stash her cash in a can.
We was taught, like, you keep your money at home. It was like, don't deal with banks.
Jones was unbanked, no bank account, as are 6 million U.S. households. Black households unbanked at more than 5 times the rate of white ones.
There's been a distrust of financial institutions since down through history.
Credit counselor Charlesteen Harris works at Southern Bancorp in predominantly Black Clarksdale, Mississippi.
Because of redlining and the different discrimination policies that were happening in the banking industry at that time, there were not a lot of opportunities to really engage with a financial institution.
Redlining, designated neighborhoods highlighted on maps in red as too hazardous for mortgage lending as far back as early last century, most of them Black, stoking distrust still evident in Memphis, where 45% of Black residents remain or underbanked.
So we're going to pause right there because honestly, I'm sure there's other great value in that video later on, but that part right there, just that first minute or so, tells us a lot about the financial conditions of different groups in this country, particularly Black America, but several other groups in this country, that there's a huge connection between your banking relationships and having a banking relationship and poverty or financial success. So the banking system is the very center of influence to wealth creation in this country. To answer the question at the beginning of the video, your bank account does not directly build credit in itself. Your bank account is not reported on a monthly basis or reported to the credit bureaus, and how your active activity in that bank account is helping you to build credit. That's not necessarily the case. But what is a direct correlation is your bank account is directly connected to you developing credit. That is in the inception and throughout your lifetime in developing credit. Your bank account is going to be deeply connected to that, and your relationship that bank account facilitates will help you to build credit. So let me give you some clarity on that so you can have some better context. But I do want to point out the fact that it is absolutely insane, and it's something that nobody pays attention to when it comes to Black America in particularly and other low-income areas and low-income groups. Most of us have a consistent theme of having distrust where we're unbanked or underbanked. This causes a serious cost for financial services that isn't normally there if you have healthy banking relationships. It also limits access to the financial products you need to function in the rest of the economic system. So if you're talking about, like I said a minute ago, owning a home, just getting decent credit cards, maybe starting and funding a business, if you're looking to just make sure that you have a good credit report for employment purposes, these things are pulled when you're trying to get a job. Many people don't know, and I've said in the past, your insurance rates, some of your insurance rates are dictated in part by your credit scores. Your credit score is everywhere, and your banking relationship is the foundation to your credit score. So let's connect the dots real quick. As I said a moment ago in clarity to answer the question, your bank account in itself is not reported to the credit bureaus and developing credit. So no, your bank account does not directly, actively generate credit for you. It is not reported because, again, it's just banking activity. That's not the way that generally works. But what it does is all other forms of credit are connected to you having a banking relationship, generally speaking. Now, what is reported on your banking relationship? Unfortunately, the good things, if you're maintaining a healthy banking relationship, that's not being reported to the credit bureaus. But if you have negative activity on that banking account, that can be reported. Overdrafts, bounce checks being two great examples of mismanaging a bank account and it actually damaging your credit report. That can get reported and damage your credit report. Something else is important to understand. Your ability to access a bank account, depending on a financial institution, can be determined by your credit report. Another avenue that is a reporting agency that bank accounts go to is called check systems. Many of you who have open bank accounts at different financial institutions may be familiar with these terms as you're hearing them, or these institutions. Check systems is often pulled by banks and credit unions to survey your existing or previous banking relationships. So there is a reporting component for banks, but not necessarily credit building directly unless it's negative. If you negatively manage that banking relationship, if you bounce a bunch of checks, if you close an account or an account ends up closing a negative balance and you end up owing that bank, that can be reported to check systems and the credit bureaus. And this can make it difficult for you to get future bank accounts. Now, that having been clear or put out there, if you have any questions about that portion, put it in the comment section down below and I'll make sure to clarify it further for you. But that out of the way, that's the only potential of your banking relationship being reported to the credit bureaus. Credit bureaus is generally if it's a negative event. Now, that having been said, let's talk about how your banking relationship does connect to developing credit. Cash flow. The majority of credit products that you're going to reach for, that can be credit cards, personal loans, auto loans, all of these different things are going to be really, really reliant on you having a job and an income. And your bank account is the best place to verify you having a job and an income. So you having an existing banking relationship at a credible financial institution that lenders can plug into, or at least get statements and data from, to verify that you have an income coming in, and maybe to be able to verify how you're managing that inflow, that is going to lead to you being able to get access to your initial credit. That goes all the way up the ladder to mortgages and business loans. So all the way up the food chain from your first credit card, first personal loan, all the way up the ladder to mortgages and business loans. All right. So you want to make sure that you have a legitimate banking relationship, or maybe even several, and that you have something that you can show lenders, or lenders can plug into to help you develop that initial credit. So your cash flow is essential. Your bank account is going to facilitate that inflow of income, your cash flow, and the outflows, your expenses. That's what most lenders are going to want to see. The existing banking relationship with that existing institution is going to allow you to go from your bank account to possibly getting approved for your first bank credit card or first loan even though you might not have credit elsewhere, because they're looking at the one key factor that really facilitates if you have the capacity to pay back whatever you're about to borrow, which is your banking relationship. Hopefully that makes sense. Comment down below if you need clarity on that. So that is one component. Another layer that is really useful is going to be credit builder loans. Now, again, I know you've probably heard or maybe brushed past the concept of the pledge loan hack. Navy Federal was really popularized for that. Basically, this is a concept that goes back decades, where you were able to put your money up as collateral in a savings or a CD, put that money away, locked away by the bank. They lend you out the same equivalent amount of money that they just locked away, and you make payments on that. You use that money or deploy it, and then you allow them to take payments of that money. They free your money back up in the process. So, you know, if it's $100 a month in a payment, they're going to free up $100 of the frozen capital they have in a savings or CD. Those payments then get reported to the credit bureaus. So this is another way your banking relationship, checking, savings, CD, can get connected to your credit report and help you actually build positive payment history. It's actually one of my preferred ways for you to build credit, because you can technically do it without really going into debt, because you're really just locking away and being lent the equivalent of your own money. So the bank's 100% collateralized. The interest cost on that is minimal. It's usually no more than 1 or 2% of whatever interest you're getting on the savings that your money's sitting in. So if your money's sitting in an account getting 2%, you may only pay 3 or 4% to borrow against it, if that makes sense. So the net difference is about 1 or 2% interest, very small. You can do these accounts with as little as $250 at some financial institutions, which is very manageable for most people. And it goes on your credit report like installment payments, which builds legitimate credit on your credit report, which is a great way to build out your credit report without going into debt. So that's another way your banking relationship can get connected to build credit for you. But these are all active ways for you to build credit using your banking relationship. It's not automatic, okay? We are going into a world where your banking relationship management is slowly being integrated at the credit scoring companies like Vantage and FICO. So again, this is going to start to contribute to your credit behavior or your money management behavior. Vantage and FICO both are slowly coming out with scoring systems that are going to allow bank account data to be plugged in actively, which can boost your credit score if you're managing your banking relationship well, or can harm it if you're mismanaging your banking relationship. That's where we're going, because lenders, credit bureaus, they want better, broader oversight on your money management versus just your past payment history on fixed, debt items or credit items, okay? A lot of stuff is not reported, naturally, that you're paying on a regular basis to the credit bureaus. Utility bills, if you're not active about that, paying your cell phone bill, there's all kind of, your TV bill, etc. All these different things that we pay for and we deal with on a monthly obligations that we take care of aren't reported. So if you mismanage an auto loan and something goes bad, a personal loan, or maybe even a mortgage, all of that gets reported, or credit card. But all the other bills you're paying on a regular basis faithfully aren't getting reported unless you use self-reporting options. So adding your banking data to modern credit scoring systems and those algorithms, if you're managing your account where you're not overdrafting, you have consistent income, and it's showing the different bills you're paying, that can all contribute to a serious boost in your credit report and give you an advantage, even if you don't have a bunch of credit card history or auto loan history or personal loan history. These can be phenomenal tools. So you see your banking relationship, you start to see the fundamentals of your banking relationship to become essential to your financial reputation. And now going into the era we're going into, it's becoming essential for your credit development and an alternative view of your credit behavior, okay? So comment down below and let me know, have I answered some important questions for you around your banking relationship and the connection to credit? Let me know if you need some more clarity around the strategies. Let me know if you've had negative relationships with banks in the past that have, led to you having negative data reported. Let's talk about that further. Or let me know if you're looking for a better understanding on how you can expand your banking relationships to build out better credit and access more capital if you're looking to grow yourself in that arena financially. We're talking about getting access to a mortgage or buying rental property, funding a small business. All of that is connected to your banking relationship. I'll be putting out more videos on a regular basis covering how to navigate your banking relationship so you can have better advantage in the financial system. But let me know if this video has inspired any questions for you. Comment down below. The goal of every single one of these videos is to bring a better clarity on financial literacy and bring it on the ground without trying to convolute it with a bunch of, clickbait strategies, clickbait tactics, selling you courses. Many of us, the big problem is the fundamental understanding on how the financial system works. And financial literacy allows you to turn basic financial concepts, words, into actual wealth. It allows you to have the understanding you need to take action to convert your bank account and link it all the way up into owning your first home or owning rental property or funding a successful small business, etc. So that is what the intent of this content is designed to do. So comment down below, like, comment, share, subscribe, support the video, support the channel so the channel can continue to reinvest back into and support you. Also, get in the description down below. There should be a link to tie in with me on Instagram. Comment down below if you want to look into connecting with me one-to-one and getting a more personalized view or personalized guidance on your financial situation so I can help you there. But other than that, I want each and every one of you to stay focused, stay in motion. I'll see y'all soon.